We're kicking off the final trading week for the month of March, and we're seeing U.S. equity averages deep in the red. We are well off session lows, so joining me now is Peter Cardillo of First Standard Financial. Peter, great to have you here today.
Good to be back.
Well, as expected, U.S. futures are seeing red today, but we are off the session lows. And of course, on Friday, the Trump administration failed to repeal and replace Obamacare. But going forward, there are doubts about whether Trump will follow through in terms of campaign measures, including tax reform and deregulation. So from a fundamental perspective, what are you looking out for?
Well, look, this market has gone up on hope and not really any substantial change in terms of pro-growth programs. And of course, a lot of the hope has already been built in the market. Now we see a little bit of reality coming into place, and that means that the administration had a setback. And so the big question mark here is, will Mr. Trump be able to get lower taxes? And if that's a setback, then obviously, this market has bet on the wrong possibilities. And so as a result of that, we're not seeing any panic in the market. Let's understand that. Market is lower. Of course, it can certainly affect the technical position of it, and in fact, with the S&P now under that 340 level, if we were to get a close beneath that, we'd probably be headed for more declines, and this could amount to maybe 6 or 8%.
Well, it's interesting you mentioned technicals, because that is something we'll be watching out for the major averages. But we did begin to see cracks in terms of technicals last week when it comes to possibility of a correction. But I do want to shift our focus on over to the Eurozone. Now, we do have the elections in France that are in the spotlight. So what do you expect to see?
Well, it seems that the polls in France have turned in favor of Le Pen. And over the weekend, she made some pretty stern statements about the European Union probably disintegrating, and of course the populist movement gaining footage. And that would mean that if that were to happen in France, I think that probably could be even more significant than the setback for Trump.
And last but not least, before we wrap it up, the next time we meet, it will be the month of April, and that kicks off the beginning of Q2. So given everything that's happening globally in terms of central banks, in terms of politics, as well as financial instruments and commodities, what are you watching out for?
Well, again, we're going to be watching very closely to what happens in the coming days with the French polls. Obviously, we're looking at technical levels as far as the markets are concerned. And I think another thing to look at very carefully is the macro numbers. I don't think that they're going to weaken. Now, tomorrow we have consumers' confidence, and I don't think that, this is going to be, I don't think we're going to see any major changes because of what happened on Friday. But going forward, that's going to be a very key number. If those numbers begin to dwindle, that means that the sentiment among investors could turn quite negative, and that would not be good in terms of the stock market.